Hi everyone, it's Jennifer Smith at Murphy Business in Cape Girardeau. We're here today to talk about value of a business versus its sellability. It's one of our favorite things to talk about, honestly, because although many small and mid-sized businesses know how to drive particular line items in their financials, things like the revenue line item or cost of goods sold or their bank balance on the balance sheet, things like that, many times we find out that they don't really understand how to drive the actual value of the business. And sometimes that can feel a little mysterious and a little overwhelming. So we're here to talk about that a little bit today. One of the biggest influencers of value on a business is its recasted earnings. And that might be a new term for you. Most business owners make decisions throughout the year that drive down their taxable income. That's done on purpose, and it's a strategic move on their part. And we want them to continue doing that. That's a good and prudent thing to do. But before a business can be valued correctly, we need to recast the earnings, which means that we need to get all of the things out of the financials that are completely discretionary to the owner, things like what they pay themselves or other perks that a business owner has, any non-cash items, their interest expense, things like that are unique to that business's ownership, that a buyer would not necessarily incur, or they might have a different structure or an idea in mind. So we're going to recast those earnings and get at what the business actually produces regardless of who owns it. And basically that means that the higher the recasted earnings, the higher the value, because the recasted earnings drive the value, not the revenue. It's a very common misnomer out there. Other factors that influence what a business is worth are things like client concentration. If you have too many eggs in one basket or too many eggs in one industry basket, that can really impact the value of the business, because the higher the concentration, either among the client base or among the industry, the higher the concentration, the higher the risk, and the lower the value. So you want to be mindful of that. Diversification is your friend in all things in terms of reducing risk. The legal structure can sometimes drive the value as well. There are certain legal structures out there that require, from a tax standpoint, from a feasibility standpoint, they require a stock sale. And most buyers don't want to go through a stock sale because there's some trailing liability involved with that. So that can certainly impact things too. And then also seller financing. So when a seller agrees to take on either a small note or a large note from a taxation standpoint, sometimes that makes sense. When a seller agrees to take on some portion of financing for a purchase, they're kind of standing behind their business and they're saying, I really think that this business is going to do well, and I'm going to put some money where my mouth is, right? So that can influence the value as well. Buyers are sometimes willing to pay a little bit more if a seller is willing to finance some of the purchase price because of what that means. It also sometimes means that they don't have to rely quite as heavily on traditional financing. Now, the factors that influence a business's value may differ from the factors that affect its overall sellability. So, and if that's a new term to you, sellability, it's how sellable is the business. And you're kind of looking at that through our lens as a business broker, but also through the lens of a buyer. So while the business's value has to do with a number, the sellability has to do with the attractiveness of the overall opportunity. Does that make sense? Hopefully you're nodding your head as you're reading, or as you're looking at the screen. Some factors that affect the sellability of a business is, I think the number one is probably owner involvement. So the more integral the owner is to the daily operations of the business, the less sellable it is, as a general statement, because it's harder for a buyer to see themselves either stepping into those shoes as an owner operator or finding somebody that can step into those shoes and take over for that seller. So what we want to do in the years leading up to a sale is start to slowly extract that seller from the day-to-day operations. That makes the business more sellable. We also want to see really clean books. So if you got some junk that's running through your P&L, or if you've got some outdated or obsolete inventory or things like that on your balance sheet, we want to get all of that cleaned up so that the buyer has a high level of confidence that the financials really represent the business. The next thing we want to talk about is physical and digital curb appeal. So you usually hear that term in real estate, and in the physical sense, that's very true. We want to make sure that your property, your equipment, your plant floor, your warehouse, your storerooms, your offices, that all of those look really good. We've actually had buyers that have walked away from deals because they said, I wouldn't feel proud to bring my friends and family here and tell them that I own this. This place is a mess, right? So if you need to paint, if you need to organize, if you need to pitch some stuff, rent a dumpster and just get it done. But there's also curb appeal digitally. So we want to make sure that your website, your social media, anything else that you're doing online that represents your brand virtually really looks good, because that's the very first place that a buyer is going to go, is to your website. And if they're not impressed, they're probably not going to continue in the process of buying. And then finally, a factor that we want to talk about is industry outlook. So I call this the Blockbuster Video example, right? So Blockbuster Video might have been a really good company in its heyday, but with Netflix and Hulu and streaming and DirecTV and all of that, they're just obsolete. They just didn't stay with the times. And so we couldn't sell a Blockbuster Video even if it was making good money, just because the industry outlook is not good for that particular business model. So we want to make sure that the industry is steady and expanding, and that you are staying current and relevant with technology, and that you're keeping up with the times. Recently, and this is the reason why we came up with this topic, recently we talked to a business owner who had a really nice, healthy company and had a great valuation, and we were sitting down going through that, and he wanted to know what the impact was on the value, what the impact was of the name of his business, which was a pretty good name. He had very attractive office space. He had a very good location. He wanted to know how those factors were impacting the value that we were talking about. And the answer was not much. It didn't really have a whole lot to do with the value, other than the fact that those things drive revenue, right? So to the extent that they drive revenue and that money falls to the bottom line, it drives value. But in and of themselves, they affect sellability. So a really good name that's not dependent upon, say, the owner's last name or some family name or something like that. Good name of a company, an attractive office space, and a good location. All of those things are going to affect the sellability more sometimes than they will impact the value. So if you'd like to find out how sellable your business is, we have developed a free sellability assessment that you can take online at murphyscore.com. That's murphyscore.com, MURPHY score.com. We promise we'll keep everything confidential. We're not going to sell your data. We're not going to tell anybody what you put on your sellability score. It's just a really great tool for you to, from the comfort of your own home or office, help you understand a little bit what is driving the sellability and how you are positioned today in terms of being able to sell in the future, and what you might want to do in the future to get it better prepared. And then, of course, when you're ready to talk about selling, give us a call and we'll be happy to have a free confidential discussion with you. Hope you have a great day, and thanks so much for listening. Take care.